So you want to invest in Web3, but you don't know what tokens to buy? You can use SwissBorg's thematics instead. They select a collection of the best performing Web3 tokens and rebalance them upon performance. So you don't need to worry about going all in on an absolute steaming turd. Sounds good to me. SwissBorg. Hello everybody, welcome back. Let's get started, shall we? So gold and Bitcoin are probably the best two things to look at today as the weekend is here. Not a great deal to look at outside of that. The only reason I'm bringing gold to use is to just show you the correlation. Not that I'm sure you've recognized it, but you know there's always a correlation with Bitcoin, whether it's through the forex situation. In the bear market there was an energy rotation, wasn't there? So energy commodities into stocks and indices and crypto. We did those decent swings. Then we moved from a forex kind of correlation, didn't we, where we're looking at the top on the dollar. We got that, and the movement up on the euro, and that basically formed the everything balance 2.0, and then FTX destroyed crypto, and then that formed a bottom, and there we go. The rest is history. So everything looking pretty sweet and pretty good on the long term. There's really nothing bad to say about the way that the chart is looking. It's not a parabolic blow off top that we've seen right here. This is not the case. I can show you this on the weekly. And the things that we normally look for a parabolic blow off top on Bitcoin would be the money flow index. We have this one over here, which is your 2017 into 18 pop. Then we had the beginning of the bull markets, 2019, big parabolic pop. Then we had the movement into the 2021 300% rally on Bitcoin, where it broke out from its previous major range, the range that had been sat in for basically 2 years, and then we rallied up to cause this big pop, basically, and it did pop. There was an alt season in between all of this, so that's where we found the money flowing straight into Bitcoin, 300% up. We consolidated in the form of a pop, then the market carried on rallying with the form of altcoins. But either way, that was a money flow index pop. Things started to get a little bit crazy around those times. Not really seeing anything like that around here. So this doesn't look like it's going to pop and crash back down into its own shadow. Just to put it out there, just a little bit of perspective. It's not looking like that's what's going to happen right now. What we could be seeing, however, is a consolidation, and a worthy one at that. Because let's face it, we've rallied from the bottom roughly to the top, a modest 100%, give or take. You know, so 100% rallies normally have to have some kind of pullback, and like I say, a pullback, not a crash. Okay, a pullback, not a crash. Don't see any reason for it to crash. And if you haven't bought Bitcoin, if you didn't buy it sort of at its lows when we did, or even buy the dip at the 21,000 area, then maybe this is your time to start dollar cost averaging into these major areas of support. So the first area is given to us currently now, because obviously we lost the Bollinger Band. So these are the shorter term time frames for scalpy trades. Didn't work out. We closed below there, retested it, came all the way down to a 50 exponential. 50 exponential after a golden cross is usually a decent area to think about buying because it's diverging. So long as we're above this bad boy and this bad boy, things are actually okay. They're not all that bad. And we are quite far above them, to be honest with you. So the last bid that I put in for Bitcoin was basically 21,500. And now we're seeing that the 200 simple moving average is about that level anyway. So I'm not saying that we can't come down to these levels. We can. But to break down from those levels are pretty unrealistic at this stage now. I think the trend speaks for itself, and the trend is quite strong. We do have this Chiku span now closed within the price action, so that has cancelled out the latter stage of this trend. That's fine. But the overall trend as far as higher highs and higher lows is still very much in play. And again, just take off all the noise, we can see what we're looking at here. Low, high, and then wherever this low is, as long as we don't break down below what these previous highs over here and close below 20, we'll call it 24,000, then yeah, we've got a series of higher highs and higher lows, and that is basically your uptrend. That's what we're looking at there. So there's nothing to be concerned about right there. No money flow index bubble pop, no major bearish divergence on the higher term time frames like a weekly, for instance. It's just a daily and a 4-hourly consolidating basically at this stage with areas below us. So the first major zone now after we lost the Bollinger Band center at 29,000 is right this very moment in time, that the 50 exponential moving average. And if you want to give a bit of contingency, you could look at the 50 simple moving average, which is about 26,900. Normally that 50 exponent, the 50 simple wouldn't really be a thing, but considering we had such a decent response on the 50 on the 200 simple moving average, we'll use that as a shadow of the exponential. I prefer the exponentials, but yeah, you can't deny that this has been a very decent V-shaped recovery from a golden cross. We thought we'd get it from an exponential. We didn't. We got it from a simple, and the rest is history, like I say. So it's all looking quite good still. And a lot of people will be like, oh, but it's going down, down, it's going down, it's going down, down. All right, yeah, you're right. It is going down. That's right. It is going down. Still significantly up though from the bids that we put in. Obviously from the ones from the bottom, and then from the ones from the 21,500, where I did actually put a sizable amount, buying quite a few bitcoins at that level. And it's only from that that I've been rotating into the altcoins. Still 30% in altcoins, for better or for worse. Obviously, mostly for worse at the moment. But that is the game we play. So I probably will look at rotating into more altcoins, to be honest with you, but not quite yet. Not quite yet. We're gonna wait for a bit more of this. Excuse me. Oh, it's a bit croaky in the morning. It's a bit more of this range bound stuff, really, because Bitcoin is the place that's dictating the trend. I've lost my exponential moving average there. Maybe I'll just do that at a different date, because it basically is here. So we are looking for a bounce around here. Now, if we did get a bounce from here, probably the best thing you could ask for would be to any one of these moving averages. So between 5 and 6%, perhaps maybe over the weekend. Be very surprised to see us break the 20 simple at this point now, considering it's quite a steep drop. But a bounce up to it is not unrealistic at all. 65% more likely to stay in the Bollinger Band portion that you're in, which would be the lower portion. And that would mean that the major resistance is going to be the center. So any kind of trade here in the short term could be made with a view as the top target of just short of 29,000. So let's just take it to a 4-hourly, which is pretty sad. We're below all major moving averages, obviously trending down with no bullish divergence in play outside of the money flow index. And this is also something we want to recognize as well. The volume has been pretty measly and pathetic for a long period of time. So this does make it vulnerable to further downside as much as it would make it, explosive for further upside. We're still basically trending with basically little to no money. Now, the reason I was talking about gold this morning, again, is because the correlation is so high. And what we see here is a consolidation on gold after finding a new all-time high over here. Might not be the newest all-time high, but it wasn't far off. So a very significant peak was formed on gold. And now we're looking for a consolidation on gold, it would appear. We've been stuck between the 20 simple and the 20 exponential, and the 10 exponential, sorry, forming this, well, we can call it a symmetrical triangle. We've been keeping our eyes on this, saying which way it breaks should have continuation in that direction. Broken down now, so similar to Bitcoin, we'll be looking for major supports on moving averages, whether it's on a daily, maybe even a 4-hourly. We'll take it to a 4-hourly because we're quite close to a 200 exponential sitting around here at 1966. But the best thing to look at, again, just to put it, put everything into context, is the higher term timeframes. So the bids on gold, the original ones filled quite nicely. Then we bought these dips down here and sold incrementally on the way up because we were looking for a consolidation or a pullback around 2000, and that looks like we're getting that. But look at this trend, right? Look at this incredible trend, right? So there's your weekly golden cross all the way up. It reminds me a little bit like the Ethereum to Bitcoin chart, in all fairness. And trending up. We're above all major moving averages on a weekly. We've got a pump signal on a weekly as well. Recognize pump signals on weeklies can take weeks to play out. Weeks, maybe months to play out. Okay, it's a long, higher term time frame here. But it still looks like a good chart to me. And dips to be bought on gold would take place on a 10 exponential and certainly on the Bollinger Band Center, which is down here, back down below 1900 again. All of these are opportunities for further upside. Gold is continuing to rally as far as I can see. There's no reason for this trend to finish right now. Similar to that of Bitcoin, we had a bubble pop over here with a nice consolidation into some serious moving averages on the weekly, but also on the daily. This is where we scraped them up on the daily. Golden cross retest, pretty standard stuff. The same thing we traded on Euro, the same thing we traded on Bitcoin mostly, the same thing we traded on any old thing. And one thing we could also think about in a moment would be the total market cap too, which is looking to form this exact setup, which makes me feel a little more bullish on the market and buying these dips, especially for altcoins. Again, the original alt season given to us by a Bitcoin dominance chart, it was not quite what it appeared. It works to an extent. It wasn't as deadly in the downside as possible, but yeah, This is why you scale in factors of 10% and don't go all in. So I've still got that 20% that I'm looking to rotate into it. And this time round, I'll be looking at the dominance, rather than the dominance chart, I'll be looking at the total market cap too for a bounce to form this kind of move. Exactly the same way that Bitcoin moved, in the same way. We moved into a 200 exponential and then the 200 simple, like we've already shown. Kapow. We'll be looking for something similar to that. So gold and Bitcoin doing the same thing. I'm not bearish on gold. I'm not bearish on Bitcoin. I think the bids in the upper teens that we bought, and especially the big buys that I put in around 21,500, I think they're pretty much safe, to be honest with you. I don't really see a problem with any of that. So let's have a look at the total too, and we'll see what sort of situations forming on the daily here. Right, so there's your golden cross. Here's your exponential, and here's a simple moving average, right? So this could be what we see in the short term for altcoins, right? We could see a move down to the tune of roughly around 2% to maybe the tune of just less than, well, just about 9% before we get one of those moves similar to what we saw on Bitcoin, similar to that of gold, similar to that of Euro, and the inverse of the Dixie, and all the things that we like to trade and they've traded successfully given these sort of setups and this continuation of a trend. All of them doing the same thing. So we should look at this and expect something similar. In my expectation, these sort of setups are about 70% likely to play out. So that's quite a decent that's quite decent rewards, risk to reward. On the daily here, what we see is a 200 exponential. We're above that. 200 simple above that. 200 the 20 above that. We're above all the major moving averages on the weekly here. And we do have drives of hidden bearish divergence, that's true, but we also have lots of support below us. So for those, and I'm sure there's plenty of people sort of saying, it's going down. Let's put these into context, right? You know me, I trade based on dailies and 4 hourlies and weeklies. So the larger swings are that's my thing, right? So buying, getting the bids around this area and still being significantly in profit and rotating into altcoins, which are going down even further at this level based on other charts outside of their own individual charts, still working out pretty well, right? This isn't futures trading. I always try to deter people from futures trading because if you're watching these videos, you're obviously still trying to learn or gain insight from other people. Futures trading are for people who are more or less, self-sustained and have a good strategy. They don't need anybody else to tell them what's going on. So I wouldn't advise you do anything like that. But when we're talking about daily, weekly, and even 4 hourly timeframes, futures trades can be a little testing because there's so many other things at play. But just to put it, like I say, into context, we've got a series of higher highs, higher lows. All the bids still in profit. Some of the altcoins are down, obviously. But generally speaking, it's just been nothing but profit since the beginning of this year. So we've done very well. In fact, it's been pretty awesome, in all fairness. This is almost as good as the bear market bounces that we got with the everything bounces and the alt seasons within that. It's been almost that good. And actually, when it comes to traditional markets, it's been better. So this year has actually been very generous now throughout the beginning of this whole year, the first Q1 into Q2. So a consolidation is required, but the consolidation is going to still be a bullish situation or a bullish setup because we're spoilt for choice for moving averages, whether it's a daily, 3 daily or weekly. They're all below us. We've got plenty of opportunity to buy and incrementally buy into these dips. For the long term, just stock up, get some Bitcoin ammunition to rotate into altcoins when we get another one of those setups. But for me, I probably won't need to buy any more Bitcoin because I don't expect Bitcoin to come down below my previous bids of 21,500. I don't really expect Bitcoin to close anywhere below 23,000 at this point now. So any one of these areas, such as now, also 26,003, 25,008, we've got 24,005, and then a big one would probably be 23,000. And this is all just based on this week's weekly, which will close in a couple of days. So let's face it, all these supports are going to be higher. They're all going to be higher by Monday. So I don't see anything other than an opportunity for those who want to buy into Bitcoin for the long term or crypto for the long term anyway. This is all, very decent structural behavior. And it's only fair to see a consolidation, although it has been pretty fast, after a 100% rally on something like Bitcoin that people deemed as absolutely dead. All not that long ago, So just there's no need to change your underpants. Your underpants should be clean. Like I say, mine certainly are. They're squeaky clean. and the reason for it is because charts are telling us a story. All charts are telling a story that everything is generally going to continue to trend up, with or without the CPI, the FOMC, or anybody farting in the wrong direction. It's only going to take a massive black swan that is unforeseen that is going to bring these charts down into the crash that people want to believe in. But consolidations down to those lower levels, maybe even down to 23,000 for Bitcoin, is still fine and actually quite appropriate, really, and will only bring opportunity. And for altcoins, there's opportunity more or less as we speak, but I would still wait a little further. If we get a golden cross retest here, it might be worth trying it, and this one will be worth trying it as well. So between 3 to 9% further down across the board for altcoins before we could see a serious rally that could even end up in a V-shaped recovery, like all those other charts that I've shown, and like I say, all of them. So we've had a pretty high success rate just based on this simple strategy. Right, I will leave it with you there. Don't fret, everything is okay. This is not wrecked city, it's just downside city. And we can cope with that because downside offers up areas to buy on supports in order to sail back up. This is something that I think a lot of the comments don't quite get. The most exciting times are downside times because that gives you the opportunity to buy. The amount of times when I do the live streams or just things in general, people sending me messages on Telegram and they say, oh, when should I buy? And there's a chart that looks basically like this. Yeah, it looks like that. So, is it too late to buy? And the answer would be generally, for the most part, yes. And they say, when should I buy? And I say, well, when we come down. So where we're going to come down to. So we'll focus on your moving averages. Focus on a 200 exponential, for instance, something like this. Maybe a 50, maybe your Bollinger Band Center. And they're like, oh, that's never going to happen. And then, a couple of weeks, maybe even a couple of days later, kapow, right down into it. Do you want to buy it now? Absolutely not. Why not? That's where we were thinking about buying it from. No, I only want to buy when it's here. I'll never buy when it's down here in the red. That's something that people need to try and get over, because that is where you do buy. That is where you do buy. I remember sort of buying down here and saying, I think Bitcoin's going to go to 19,500. Obviously not on this chart, but you know what I mean. I bought scraping these lows down here. So I think Bitcoin's going to go to 19,500 into this area. I think that's where it's going to go. Somewhere around here, I think it's going to do that. Anyway, we went up there. But prior to that, people saying, you're an idiot, man. Can you not see? 12,000, 10,000, 3,000. I don't know why it's Arnold Schwarzenegger. He wasn't saying anything to me, but you see what I mean? And it was exactly the same as when I was buying down here at the time. I remember people saying, what are you talking about? It will not stay down here. It will go down lower because that's what it always does. It's going to go back to its previous high, 1,000. It didn't, did it? It didn't. And it shot up big time and then actually performed a very boring portion of price action after that. But it's usually the same. So normally when people see things that in front of their face, just like a goldfish, they will say, oh, it's going to end up down here. Because I see what YouTube and Twitter are like. It's all very sensational, isn't it? It's very emotional. Click on this because I'm telling you that it's going to go down to... Well, the chances are it's most likely going to maintain its structure. It's not popped. It's not done anything like that. And traditional markets all look pretty good. In gold, yeah, it looks like it wants to come down a bit, but it's still very bullish chart, and it matches all the fundamentals of all the reasons why it should be going up. So really no reason to doubt that this is going to be a continued uptrend. And to be honest, if we're talking like areas of like 21,000 or 21,500, let's just put it on the map for my last big major buy where I scooped up a handful of Bitcoin. I'll be talking about, am I likely to see that area revisited before we see 32,000 revisited? I think for me, I think it's pretty likely that we actually see this area revisited than this area down here. It just doesn't make enough sense for us to come down in that massive way. And if we did, I would certainly be buying more. Because, like I say, you do the calculations on this chart, especially with the way that the economy. I did a long-term video, I suppose, when we were down here. I suppose about what's the thinking about the broader picture. What's the S&P? What's gold? What's Forex doing? What's central banks doing? What's going on basically? And we gave it like a 2-year time frames for all the madness that's basically surrounding these charts to basically be resolved, like inflation more or less resolved within a 2-year period from down here. So we've got another 18 months or so before inflation's at a standard level. And then basically all we've got left is charts. That's all we've got left is charts at that point. And at that point, the charts are most likely going to be probably up here and beyond, even with that kind of madness. So just think about it in that context. I know people want to get rich quick, obviously, but you know, the first time I got into crypto was back in, well, the mid-teens really, and I wasn't getting rich quick, but I certainly got rich quick in terms of parabolic run a few years later. You know, 100x on XRP, you know, about a 10x on Bitcoin that I'd done. And as far as I'm concerned, doing those kind of gains over a 2-year period is pretty awesome. Absolutely awesome. Then did it all over again here. You know, I did a 20x on Bitcoin, a 40x on Ethereum, 100x on Matic, 35x on a holochain. It's just, you know, the list is endless. Lots of X's basically. And you know, it depends on what you think is quick. Some people think they're making money in a day or a week. You know, that's the crypto dream. But really, making money quick is over a few years. That's pretty quick, to be fair with you. That's pretty quick. And if you're thinking about entering into crypto, all of these areas down here, all of these areas are fine, because what we're looking at is these sort of this kind of area. This is it. Might be a large area on the face of it, but in the grand context of what it's going to be like over a few years, it's actually perfectly fine. There's really nothing wrong with that at all, and that is quick money in the form of an investment or even just a trade. You know, it's pretty sweet. So don't get concerned. No need to soil yourself. Things are all okay, and all this is just another opportunity to buy lower at areas given to us on a chart. Thanks for watching, guys. Hope you have a nice day. Take it easy.